Guys, this is going to be a complete tutorial for the Zack attack indicator. This is going to be for version 2 of the indicator. So I've went back and I've added a couple of updates, and the most important update that's been added is the automatically adjusting supply and demand zones. So we already have demand zones and supply zones that are based on previous day price action going back all the way up to 10 days. However, we don't have dynamically changing supply and demand zones that will be altered based on significant pivot points that happen throughout the day. So that's been added, and that's very important, so I want to discuss that. And then again, I'm just going to talk you through how to get the indicator, how to apply it to your chart, and then also how to just configure your settings, and then how I personally use it to trade NQ, and then we can get into options as well. So I primarily use it for scalping, but again, when we have large days with significant volatility and follow through, it's great for also gauging trend, riding the trend, entering on pullbacks, and then getting continuation, profiting off of that. So we'll get into all that. Now, the first thing I want to talk about is how to get the indicator. So it's through WAP. So I have a link in my bio, and then Zach Morris also has a link in his bio. It's the indicator only option, so make sure you select that. It's going to ask you for your TradingView username, and the reason it's doing that is because it's going to automatically add you, so there's no lag time between when the order is filled and when you actually get the indicator added. So it's going to add you, and then what you need to do is go to this here at the top, this bar, the indicator, click on it. Once you click on indicators, you're going to go down to invite only, and you should see the Zack attack indicator. So I already have it added to my chart, so I'm just going to go ahead and unhide it. As you can see, I don't have anything on my chart except for the default volume. So that's a default indicator that just comes on every single one of the TradingView charts. You can see it's down there. So I keep that on there because volume is a very important part of my trading, and it should be for everyone. So I do have volume on there, and then we're going to enable the Zack attack indicator. So right away, you're going to see a lot of things happening. You're going to see these supply and demand zones that are generated based on significant pivots. And what I mean by that is when we have a sharp reversal, we have an area of supply that is caused here, which is, you can think of it as a area of heavy resistance. And the same thing when we have a sharp pivot from the downside, we create an area of support or demand. And so those are going to be shifting and plotting as price action develops. So we're going to go into the indicator settings. I'm going to show you all the features. So if you click on this drop down arrow, it'll show you all the indicators that you have. This eye icon allows you to hide and unhide indicators. So if you want to have other ones on there and just kind of throw this on and hide it as you please, depending on what you're doing that day, you can do that. This is to just, the trash can is to remove it from your chart. It doesn't mean you're getting rid of the indicator. It just means on this particular layout, it's going to be removed, and you can always just go back and add it. Now, that's something that you do want to do whenever an update is pushed. When you get a new update for the indicator, make sure you remove the old version, re-add it, and then it'll essentially refresh and give you the most up-to-date version. So what we want to do is we want to click on the settings icon, and it's going to pull up all the settings for the Zack attack indicator. The first setting that we're going to talk about is the trading hours. So if you hover over here, you'll see it'll give you kind of a breakdown of what this actually is. So this is a trading hours that allow the indicator to decide when it's going to show signals. So let's say I am a trader who only trades between noon and 3 p.m. and I don't want a bunch of signals, I don't want notifications outside of that time window. Then I can actually just adjust that by selecting the time here. It's obviously in 24 hours. So let's say I want to trade from 2 to 4. So I'd find 14, and then I'd set this to 16, and that keeps all the signals within that interval that I select. Now, if you want it to be 24/7, especially if you're trading something like futures, where 23 hours of the day things are happening, then I would just set it for a 24-hour interval, which means it's just nonstop. And that's very easily done by just selecting the same time in the interval, right? So it's saying basically from 9:30 a.m. to 9:30 a.m., which is a full 24 hours, that's when you're getting signals. And it just kind of, you could set this as 1 p.m. to 1 p.m. It doesn't matter, as long as it's the same 2 times here, you're going to get 24 hours of signals. Now, there's a fast EMA and a slow EMA, and those are the 2 EMAs that comprise the EMA cloud. So the fast EMA is the one that has a shorter period. That is going to be your white line here. And the slow EMA is going to be the one for the longer period, which is the blue line here. And you can actually go ahead and change the color of these if you like. I know some people are used to their own setups without this indicator, and they have certain colors for their certain moving averages, so that can be configured. Now, the EMA Cloud. The EMA Cloud is a tool that I created for this script. It's not something uncommon, right? We know EMA clouds, we know ribbons, but the nice thing about it is it's for somebody who's visual. Instead of just seeing what position the fast EMA is relative to the blue EMA, just by looking at the chart, you already know, right? So if I look at, I think I keep changing my DPI on accident, so I'm getting that notification. But if you look at, for example, when it flips to red here, that just means that the slow EMA with blue one is on top of the fast EMA. And then the same thing when it's green here, it means our fast EMA is above the slow EMA, which just means that price has bullish momentum because price is above our short-term moving average, and it's also above the long-term moving average. So you can go ahead and change this to whatever 2 colors you want. I obviously have it as green because we know green is for bullish things, and then red is for bearish things, but you can change it to whatever you want, and you can just uncheck it, and you should see that the eye icon here is going to hover for a little bit, or it's going to kind of show a circle. It's loading, and that just means that the script is going through the code, altering the code, and then disabling the coloring for the cloud. So I just keep it on, but you can also turn that off. Now, we also have automatic support and resistance built into this script. So as price develops, and I'm actually going to move more towards the more recent price action so you can actually see it. This is real time here. You can see that NQ is moving here for 4 minutes and 50 seconds on this candle, but you can see that we have created a resistance area here. You can see a support area there, and then all of these little gray lines are where previous automatically plotted support and resistance used to lie. So if I just go here, just rewind in time, you can see that there was a resistance formed here that aligned with our downside pivot that created this supply zone. There was support here from this pivot went to the upside that also created our demand zone. And then we had a low of day bounce here, which created this support, and then once that support was cracked, you can see we made a sharp move to the downside. So that's very simple to understand how the support and resistance works, and you can choose whatever colors you want. I keep them all as white because for me, I know as a trader, if that level is above price, it's resistance. If it's below it, it's support. I don't necessarily need the different colors, and this just helps me to recognize them as significant levels by just keeping them all the same color. The look back period, if you decrease it, that just means that you're looking at less candles to plot those lines. So the lower your look back period, or the shorter the look back period, the more, I guess, you could say the more busy your chart is, the more levels you're going to have. So if I decrease this to, let's say, 9, you're going to see a lot more levels get plotted once it's done loading. So you can see that a lot more levels close together. And then I can even go down as far as 7 if I want to be a little crazy, and you'll see that we'll get even more lines, right? So we're shifting. Now we have 6 lines here. 15 for me is a really good sweet spot because I don't want too much overload on the indicator. I don't want to be thinking every trade because I have a level right above and right below it. Right, I only want the most significant points, and so I put that as 15. If you want a thicker line, I keep it at just 1. You can change the width. And if you don't like these labels, it tells you the exact price down to the decimal, the 10th place. You can just uncheck that, and you'll see let it load with that icon, and then all of your support and resistance labels will go away. Now let's talk about the next setting here. Oops, I did not mean to do that. Let me just undo, remove drawings, so I can get rid of those circles. So I'm going to exit replay mode, and I'm going to show you how we can look at, I think this is a good area that has a mixture of signals. We can look at the size of the arrow. So this one was an addition I made a few months ago, and it's talking about arrow size, and that's just related to the short and long signals. So if you'll notice on desktop, this arrow is a little small, but on mobile it would appear as a normal size, right? So it appearing small on desktop but a normal size on mobile means that we have different, obviously, resolutions and different display dimensions based on your laptop, your computer, and so I made 2 different sizes for the arrow so that if you're on mobile you can keep it small, but if you're on desktop like this and you want it to be a little bit more visible, just change it to the normal size and you'll see how the size of the text as well as the size of the arrow itself changes. And so I'm just going to keep it on normal for the sake of this demonstration. So next we're going to get into the bullish and bearish PR. So you can see here there's a description if you hover over the eye that I've built in where it tells you the purpose of the PR, which stands for potential reversal signal. So the potential reversal signal is essentially aiming to identify exactly what it's saying, potential reversals or continuation off of that, and it's kind of trying to identify a sharp pivot point. So if we take a look at, for example, let's look at this PR signal here that came after a little move down after that short signal. So let's go ahead and let's look at this PR. So we had this short signal that broke below our intraday demand, cracked below it, and then we had a move down about, very close to VWAP. Sorry, my computer is lagging. What the hell? All right. So we had a move of about 0.23%, 42 points on NQ. We had that sharp move down after we had that short signal, and then we had a push back up immediately after these 2 rejections here. We found a bounce spot here, and then we fired a PR signal. So the PR signal is saying that this is a potential reversal, and what it's looking to do is catch the bottom of an overextended trend and look for the kind of trying to really the reversal point, exactly as it seems. However, this does not mean a full trend reversal because our full trend reversals we aim to identify those by the short and long signals. This is more of a short-term reversal, looking for a bounce, and the target that I always have is the maximum target that I have for these is the EMA cloud, right? So if I'm looking to play this potential reversal to the upside, number one, the immediate target where we could face some resistance if you want to scalp is this supply zone. That's a 30-point move. That's about $600+ for one NQ contract, so that's not insignificant. If you're looking for the full area where we would target to make sure we get out of all of our long position here, it's the EMA cloud, and we look for the fast EMA. As soon as we tap the EMAs, we want to get out, because you'll see that a lot of times when we have an established trend, we like to pull back into that EMA and then keep going after. So we don't want to get caught trying to fade the entire trend and then get pushed back down. We're just looking for the bounce where we can scalp into the upside. So you see here on the PR signal, we would enter there. The stop is actually built in. Obviously it's not going to automatically execute a stop for you, but it does look at the bottom, at the very bottom where we reversed, and it designates that as your stop loss. For me, I don't use it for candle wicks, meaning if we actually pull back, we bounce off this spot, we wick through it, and then we close above it, and then we continue the upside, I would remain in my trade. So my personal stop criteria is a close below this line here that's established by the indicator automatically. So we're going to hop in, maybe one NQ contract. We're looking to scalp this maximum to the upside there, and then we wait and see. Obviously, this is a great example of an immediate success. They're not always immediate successes. They are, pretty accurate. However, if there's a significant resistance in the way, meaning just let's say VWAP was right here, I would look to get out at that resistance as opposed to just forcing it to go into the cloud. This worked out really well. A very minimal drawdown, just a few points, and then it spiked right back up all the way into this area of resistance. So we would take our profit here, number one, because we're inside the EMA cloud, but number two, we also notice that we have a zone right here, right? We have not just any zone, we have the automatic zone, which is green, and we also have our previous and 2-day previous supply zones. So I would definitely get out there looking for, we would likely push back down after that, and you can see that we do. Right, so that's just being smart. We're taking the PR in and then we're getting out. Now you can configure notifications for the PR if you'd like. If you just click on this alerts here on the right, it looks like an alarm clock. You just tap on that and hit the add button. Let me just get out of replay because you can't do that in replay mode. Yes. So you're going to click on the plus, and then you're going to get a window open. Make sure for the condition you select the Zack attack indicator, and then you'll see all the different 4 conditions here. So let's just look at the one we just saw, potential upside reversal alert. You can set your notifications here. I had a webhook, don't worry about that. You can do notify an app, email, a toast notification, or whatever the hell that is. Play a sound, plain text. You can choose the sound you want as well. And then you're also going to want to go into the trigger conditions. So for the trigger conditions, if you put only once, that means as soon as it goes off once, it's going to disappear. The alert's never going to go off again. For me, I like to have continuous alerts, right? So if I were to do this, I would select once per bar close, which means every time a bar closes with the condition intact, it'll give you an alert, and then it'll stay continuous. Whenever that happens again, it'll fire as long as your expiration, for me, is open-ended. I don't ever want it to expire. I want this to be a continuous alert. Every single time we get a candle close with a PR signal, I want to see that on my phone and my computer. Now, you do need premium, I believe, for an endless time frame, but even if you're on the free version or, like the basic version, you can just set it like 1 month out, and then once it expires, just reset it. It's very quick and very easy. Once per bar, once per minute, these are kind of going to start to spam you because we only care about ones where the bar closes, the candle closes with the condition intact. You can set the alert name. I put a default alert message, so it's just saying, detected a PR. For the alert name, for example, I'm on NQ, so I might type in, NQ5M upside PR, and that's the name of the alert. And then the message is right here. I can also edit that message, maybe put an NQ in front of it so I know where it's coming from. But that's how you can create an alert, and it works for the buy, the short, and then both of the PRs. So that's a quick overview of the PR, the potential reversal signals. So you can actually turn off either one, and then you can also turn off that stop loss line. And if you want to extend the line, right, because let's say I'm going to go back to, oh man, this stupid thing keeps lagging. Forget it, but if you saw that red line from the PR signal earlier, what I can actually do is I can go and I can extend that line by adjusting the value to increase it. And then I'll actually make the line longer, so if I want to keep it going because I want to use that as a support or resistance level later on, you can do that. And then you can do that for the downside PRs if you want different lengths for either one, and then if the actual line width you can change as well. So VWAP settings, I don't mess with this. If you want to change your anchor period and your offset, whatever, you can do that. And then you can also change the color. I keep it as orange. and then we have our key level labels. So our key levels are very simple. They do exactly what they say they do. Now it's not going to make sense on NQ, but if I go to, for example, SPY, and I'm going to do the replay function because I want you to see how it works. So I'm going to go ahead and just kind of replay it back here, and then we're going to see our pre-market high directly comes from pre-market high. Our pre-market low traces directly back to our pre-market low value, and our high of day, at this point, let me actually hit this so it adjusts. Okay, there we go. Now it's accurate. So you can see our high of day is all the way up here. It marks it. Our pre-market high was there. Our market open is actually a new one there. So the market open price is marked. You can actually see it served as a nice bounce area here when we back up to the upside. Pre-market low and then low of day. And so all of those levels, you can change the settings on them. So if I want to, remove those levels, I can. Where are we here? So the style settings will allow you to actually mess with the levels, like if you want to change the thickness, if you want to change the actual, whether it's a line, whether it's, if you're weird and you want it like step line with breaks, whatever, you can do that. You can disable them there as well. And then the labels can be disabled right here. So if you want to get rid of these labels, you can turn those off. Now our supply and demand zones. So these are our intraday supply and demand zones that are plotted based on previous day price action. It's a goddamn tongue twister. So you can actually change the supply and demand zone color, and it explains to you, you shouldn't need explanation there, but it says defines the demand zone color. So these gray zones here, you can change that. You can expand the zone width, right? If you want it taller or shorter. You can also move the labels to the left or to the right, if you go negative, if you want to change where the labels are. And then you can actually change the label colors too. And then you can uncheck whichever ones you want. There's a typo there. It should say 4 days prior, but you can uncheck those. Now, what I would always say to have to check is the previous day zones, because the previous day zones are very significant. Price, because it's the most recent kind of footprint in the market, price likes to react pretty dramatically or significantly to those levels, at least, or those zones, at least the first time they're tapped, right? If they're broken and they're retested, they could hold up again. But because they're the most recent price action, you want to keep them on there because they are areas of interest. The trading hours actually affects the zones that are from the new update. So here's the intraday zone settings. This is the new update. And we can actually change our trading hours to show the zones. So let's say, for example, I'm looking at SPY. I don't care that we had a pre-market upside pivot here, right? I don't care. I only care about the market session zones. So I'd go in here, I would scroll down, and I would change this to, let's say, I don't want 24 hours of zones. Let's say I just want from 10 a.m. to, let's do market close, which would be 16 o'clock since I'm on Eastern, and then I hit OK. And then you're actually going to see that's going to go away, and I'm only going to get zones during trading hours, right? So that's something, if they're kind of on your chart, you don't care about pre-market zones, you can easily get rid of them by just adjusting your trading hour period. And I'm going to go ahead and change this back to 24 hours because I do primarily trade NQ on futures. And then you can also change the color of the supply and demand, and you can also enable or disable. So those are all of the settings. The style setting just allows you to turn things on and off. You can turn off the EMAs, turn off the levels, the signals, whatever, if you want to hide those. And yeah, so that's kind of a basic overview of how you can adjust the settings however you want them. So now let's take a look at, first I'm just going to discuss this short signal here, okay? So first we want to take a look at the price action that happened previously. Right, you can see we had a bounce off of the previous demand zone here. This was from 3 days ago, and this is also aligned with, let me just hit this so we get the proper levels. So we also had market open there, right? So we got a bounce here. We shot up, we initially had some resistance at the EMAs and VWAP, broke above, and then continued up into this area that was marked as a strong pivot zone, right? And it was marked a second time when we rejected that area and pushed down again. So you can see here that we have almost like a double top formation. We have a sharp sell-off on rising volume, and then we have a bear flag here into an area of multiple confluence just kind of coming together, right? So if we take a look at what do I mean by multiple areas of confluence, so we have a pullback and rejection into previous day, supply, god damn it, VWAP, and EMAs, right? So there's 3 areas of resistance. And we also have a bear flag. That's another point of conviction, right? And then we also take a look at our volume. I mean, this is a sharp rise in volume. Switch to my line tool or my arrow tool here. Sharp rise in volume, a break below all these areas following that bear flag, these heavy rejections, close below this pivot point, close below all of our, everything, right? This is a big dump. And immediately what you would want to look for is, if you're going to take the short signal, you're going to enter at the candle close here, and you're going to look for a area to take your profits, right? So the immediate area below is a 0.15% move, which is probably 30 to 40% on a contract. Maybe this early in the day you might get 20% on a 0 DTE put, but you see that level actually comes from our pre-market area, right? If I want to manually extend it, I just want to kind of, just so I have it on my chart, we can do that, but you can see that's the same zone. Oh shit. That's the same zone there. So we have a push into that zone, and then we have a bounce, but that bounce is on significantly decreased volume. You'll notice that our volume is decreasing as we're getting a pushback up. What does that mean? That means sellers are pretty weak. We form this bearish pennant, and then again we run into resistance formed by the EMA cloud. Like I said before, on days where we have, once we establish a trend, here we have a trend flip to the downside. Usually when we pull back into that EMA cloud, it's a good area for sellers to step back in and continue the price dump. You can see here, boom, we dump at this point. That's a very sharp move. You probably got 80 to 90% on those contracts, and I would definitely be scaling out here. I'd probably be all out. But if you want to continue to ride the trend, this was kind of your lucky day because we had a pullback into the EMA clouds again, and we rejected. We could never close above the clouds. And then once we actually closed back down below this area of demand, we dumped all the way into pre-market low and below. We just kept dumping. You can see the volume is very obviously increased here from the sell-off. That's a strong sell-off. But you can see, from that short signal, we did nothing but, dump, pull back, dump. We even had a little potential reversal here, but it was, immediately kind of, you can see that the volume was just, it kept going up, right? It was, the potential reversal obviously is wrong sometimes, and here the volume and the sell-off was just so strong that even though we showed signs that we could bounce back into that cloud like we did previously, we just kept going and we kept dumping. And again, another example of, look at that, back into the clouds, reject, dump, back into the clouds, reject, dump. So you can really use the, the EMA cloud as a nice pullback to reshort or relong. If you can tell that the trend is, strong, you have enough TA knowledge to identify when, this is, we have a bearish chart pattern forming kind of like here, and then we're getting, drying up the volume as we pull back up, meaning we don't have a lot of strong buyers in, and then sellers can just step in when the buyers are exhausted, when we get to an area of resistance, and then keep it dumping. So that's how you can kind of look at the signals there. Now that's for options. If you want to take a look at what I primarily trade, we're going to hop over into NQ. Now I do want to show you a couple of other tickers because it's not just, SPY, QQQ, indices, whatever. If you want to take a look at, for example, let's take a look at Apple today. If it'll load here. Yep. Okay. So we take a look at Apple, right? So we had this PR, we pulled back into the cloud. It's pre-market, nobody's really trading this. And then we have a buy signal here at open. I try to stay away from signals at open or close, but we did continue higher. We pulled back into the cloud, continued up, and then look at this area of heavy resistance. We dumped, bounced, and then we got a short signal. This was a good short signal. I probably would have waited for it to close below VWAP, and then we kind of just went down from there. So there's Apple. We can look at Google. I'm not sure why my computer's so slow today, but the thing is, it works on any stock. It'll work on crypto and Forex as well. Essentially, if you have price action and volume on that security, then you're going to get the indicators. It's going to work, right? Because it's just taking in the trading view data. All right, what do we got here? Yeah, so this is another good example, right? Long here, continued rising. Got not just one PR, but actually two PRs. And this PR marked the very top of the day, which is incredible. And then you can see we dumped all the way down here. We got a long signal here, but so people try to ask me, they're curious, when do I omit signals? So we're actually going to talk about that too. So if I have a signal, whether it's long, short, whatever, and for example, this is a long signal. However, this long signal is directly under an area of supply. I'm not going to take that because the risk to reward is not really there. For me, when I take a long signal, I like to take it to the next immediate overhead level. That doesn't give me much room. That would mean I would enter here and take my profits at this area. I could have, and I probably would have gotten like 2 or 3%, right? Because we did end up pushing after this candle closed right back into that zone, but it's not worth the risk to take that, right? Because there's an immediate overhead resistance. Same thing with a short signal, right? If I get a short down here, this did work. We did end up pulling all the way back down here before reversing a little bit and forming this candle here, which looks kind of weird. And and there's a bunch of gaps, and I don't worry about aftermarket. But you can see, again, we had this short signal going right onto that zone, right? So I'd be careful. I would just short it right back into that zone. Now, if the zone was literally right on top of it, I would just 100% omit or ignore that signal. So we have to be aware of, where the signal is, where the price action is. We don't want to take a long signal right into resistance. We don't want to take a short signal right into the supply or support or VWAP or anything like that. If it's right below us, we want to have a nice gap where we don't have anything. We just have some open space for price to run without resistance or support if we're shorting. And those are the optimal signals to take. We also like to see confirming volume. We like to see a lot of range. There's a lot of factors you have to consider. And that's why I always say that this is not, a bot. This is not a trading bot. This is just a tool to help you understand some potential areas of interest, give you notifications, and plot a lot of the things that we already plot as a trader, right? We already want to have our supply and demand zone, support and resistance. A lot of people use VWAP. Tons of people use EMAs, right? Those are things that you want to have on your chart anyway. And if you just do it all with the script, why not, right? So that was the whole point of this. Hope you guys enjoyed. As always, you can ask me questions, and hope you guys enjoyed this new update. Thanks.